Welcome to the Happy Cows Eat Smart podcast, brought to you by Novus AgriScience, where your dairy's business success is our passion. In our monthly podcast, we cover updates and insights within Federal Milk Order 33. Our team of expert ruminant nutritionists delivers research-backed, custom feed solutions tailored to your herd, because we know every farm is unique and no two solutions should ever be the same. We go beyond nutrition. Through robust tracking of herd metrics and financial benchmarking, we help you optimize costs, boost performance, and build profitability so you can focus on what matters: happy cows and a thriving business. So whether you're tuning in from your office or your truck, join us each month for insights, stories, and strategies that promote herd health, farm performance, and dairy success. Let's make your business thrive, one episode at a time. And now, Dr. Lawrence Jones will share his insights for Federal Milk Marketing Order 33.
Thank you, Ben. And let's get started with looking at the statistical uniform prices that were just released, and that's going to impact most of your milk check here. So compared to October, it looks like it was down about 24 cents. That was driven partly by fat and protein both coming up, but the price for fat going down, and then of course the PPD came down quite a bit. So when I adjust for all of the different components, I come up with a $19.50 for the overall price, which is exactly what's on the USDA report. So your statistical uniform price was $16.51, but with the addition of the components, it's $19.50. So here's a graph of your statistical uniform prices. And one of my comments and my milk market tidbits is this is the lowest statistical uniform prices across the country that we've seen really since Q1 of 21. And part of what is going to dictate that is the utilization of the different classes as well as the prices. Now, for your order, there were some minor, and I'm going to call them only minor changes in the utilization. And class 3 came down as we would expect because it was the highest price, $17.18. And you always take the higher of out of the market, and then you brought class 4 in because it was really cheap at $13.89. So again, whenever you depool like that, it's going to lower the statistical uniform price. But if your co-op did that depooling, you're going to get a depooling check. And unfortunately, if your co-op didn't, then you're just going to suffer that lower statistical uniform price. So class 1 came down $1.29 to $16.75. That's the lowest that we've seen this year. We add that $3.80 for order 33 on, we get $20.55. So that is your class 1 price on your milk check. And remember that class 1 now is the higher of 3 and 4, where it used to be the average plus 74 cents. So now it's the higher of ever since about June. So let's take a look at the first line here, which is fat. The fat percentage came up, the price went down. So price came down 12 cents to $1.71. That is our low for the year, way off of our $2.95. These are Friday closes, so this looks like it's coming up just a little bit. Now the market's been off Monday and this morning, Tuesday. But anyway, these are the Friday closes. In fact, in order 33 is particularly strong. It's 444. It came up from last month, but look what you guys have done, year over year, 15 ticks higher. And again, we've just had significant increase in components. And we compare you to the rest of the country was up about 10 ticks. Again, you're 444. The highest was the Northwest at 461. But even Texas was very high at 458. And Florida's even over 4. So again, percent fat is very strong across the nation. And just to finish this up, and one of the problems with these podcasts is I keep telling myself, if you wait one more day, you get a little bit more data. And so I did wait one more day from pulling this together, and we did get the agricultural prices. So now we know what the fat percentage is across the nation. And for October, it was about 435. So again, just a continue upward trend here. And that would be a record high for October. Now the second line is protein. Protein came up a little bit and price came up also. And so here's our price. It was $3.01. It came up 14 cents. That's the high for the year. And our low was back here in July at $1.87. And again, these are Friday closes, so it looks like that's going to mean the 240 kind of numbers. At the same time, you guys came up 10 ticks, up significantly from last month, but up significantly from a year ago. And again, that's going to be your highest protein that you've ever had in November. Compare it to the rest of the country, you're 344. Texas was actually the highest, which is a little bit of a surprising. It's usually the Northwest, but 360, and then the Northwest at 357. When you get to the Northeast, they're all around that 3, 4 plus or minus a little bit. The Northeast always takes the cake as the lowest percent protein. The next line is other solids. It's hard to change those in milk, so we're not going to worry about the percentage, but the price did come up 5 cents to 39 cents off of our low at 29. Now, other solids is controlled principally by whey, and these are very strong, and they look like they're going to remain strong, and whey is kind of the bright spot in the industry right now. And it's probably going to stay above 70 cents, and so these should stay in that mid 40 range. And then the last one is PPD. Everybody hates to see a negative PPD, but actually that's not a bad thing, because what it means is that class 3 was significantly higher than class 4. So even though you're not paid directly on class 3 price, you're actually paid on the class 3 components. It came in at 17.18. That was up 27 cents, but this does look like it's going to fall off. And I say the market's off quite a bit since I printed these on Friday. But that November settlement has been kind of a crazy contract, because 6 months out, we're $1.79 lower. We were as high as $18.98. We were as low as $16.09. But then we, settled in here at $17.18 or so. But again, just a tremendous amount of variability in those contracts. Class 4 has just been on a nosedive. It hit $13.89, which is our lowest, and it was down 41 cents from last month. A year ago they were just about $20 and change, so this has really come off. So if we look at kind of the next 12 months, class 3 is always higher than class 4, and right now it's looking like about a $2 difference. Class 3 is averaging 16.78, class 4 is averaging 14.78. Whenever you have this, you're always going to have a negative PPD. Now, one of the problems, kind of talking about what's going to impact your milk check, is the fact we've had a real shortage of data from USDA. As I say, yesterday we did get the dairy products and agricultural prices, and so I will have a little bit of that in here, but we still have got no information on cold storage, so we can't say anything about demand at this point. So the milk production report started coming down, and I've kind of been the person that says I don't trust these numbers from USDA, because this increase up here is 25,000 cows a month. This increase here is only 14. So I think they come up entirely too fast, because when we start looking at the slaughter data, it would suggest that the cow numbers should be stable or actually declining a little bit. Now, one of the problems, we went several weeks with no data, so we actually don't know what happened there. Again, my rule of thumb is that 30% slaughter rate is just kind of static for the herd. Again, add 7% deads on top of that, that's a 37% turnover rate, and usually that keeps kind of a steady herd. Now, the last data is only 44,000, which was very low, but that was Thanksgiving, and this red line here is Thanksgiving a year ago, so that was not out of line. We would expect this next one to pop up quite a bit to make up for that Thanksgiving short week. So I truly expect the USDA to kind of soft walk these cow numbers back just a little bit. But what they've printed so far, the daily production was quite high. And what everybody's nervous about is the fact this is up, like 4%, 5% year over year. But I've been arguing that these are outliers to the downside, and in fact, if we plot out this long-term trend, we're right on that long-term trend. So if we look at how we kind of change relative to this long-term trend, I would say we're just kind of increasing at a very typical pace. Now, that may be too fast, but again, we're just increasing at a typical pace. So one of the things I went back and said, okay, how does daily production relate to cheese price? So we just printed $1.74. A year ago, we had lower milk, $1.92. A year ago, we had also kind of outlier down. We were $1.74. And 4 years ago, we were right on trend line at 209. So I'm going to argue that the daily production probably is not highly correlated with cheese price. And that's simply because there's more things going on than just actual milk production. Milk per cow has kind of come off of the long-term trend. And again, if you're going to not explode milk production and you're going to have more cows, you've got to have less milk per cow. So part of the data that we get continuously, whether there's a government shutdown or not, is the global dairy trade. So this has been on just a downward trend ever since about July through December. But one of the encouraging parts is that cheddar cheese came up on this last auction. So even though overall prices are down, cheddar is up. And it would suggest that we should be exporting just a tremendous amount of cheddar because $2.11 on the world price, $1.38 on the domestic spot market. So again, exports of cheddar should be high. We should be exporting a ton of butter, but we just don't make the right kind of butter, so that doesn't happen. Now with the dairy products report, we can look at cheese production. We did get the September exports. All cheese was exported at $2.18. Now cheddar was exported at $1.97. But what I'm most interested in is how does it compare to the percent of production? So it was down a little bit compared to August, 9.6, let's call it, and August was about 9.9. So just a little bit less, but I don't think significantly so. And just a little bit less cheddar from August, but again, I don't think significantly so. Butter was exported at 273, but there's only 3.8% of the production, so not a significant amount of butter gets exported, but it was a much higher price than we have on the spot market. In my weekly podcast, I've been talking about do we have a tsunami of cheese, or do we expect to have a tsunami of cheese, or is this kind of an overreaction? Because with $1.38 spot market, that is really, really low. So we did just get the dairy products report, and what was very interesting is that the cheddar production has not increased over about the last 5 or 6 years. So even though total cheese production has gone up, cheddar production has not, and you got to remember that cheddar is what drives the overall cheese price. So again, to me, this was very good news that the market is controlling the amount of cheddar production. So again, I think this $1.38 is a little bit of an overreaction. And with that dairy products report, we can plot out the different percentages of cheeses. The highest percentage is usually Italian, and so that is continuing to be above the trend line. American, which includes cheddar, is down, and cheddar itself is down as a percentage. So again, I think the story is that we're making more cheese, but it's mainly Italian-type cheeses and not as much cheddar or American-type cheeses. But nonetheless, the spot market just has completely collapsed. This is a graph of the spot market for the last year. Now, we have kind of turned this corner, so we'll see if we can actually come back up into like $1.50, $1.60 kind of number. But it's clear that the spot cheese has been coming to the market and driving this price down. And if we look at the class 3 changes, what I do is look at the average of the 12 contracts and just compare it to the day before. So we've been on this tremendous downward trend since May. And again, it might look like that this is turning just a little bit here. So hopefully we've bottomed out and we can turn up a little bit like we have in these previous months. Now, one of the bright spots in the dairy industry has been beef sales and income from overall cull cows and calves. So we can see that the feeder cattle price, historically was down in the 270 kind of range, and now it's running clear up to 370. Now there's been a little bit of a pullback now. But I thought I would bring in Nate Donnelly from StoneX to put this in a little bit of perspective for you.
In the past couple of years, we've seen a big increase in the amount of revenue that U.S. dairy farmers are getting from the beef industry. U.S. dairy farmers have been increasingly crossbreeding their cows with beef genetics and producing crossbred calves that are being sold into the beef supply chain. Along with that, we've seen record high beef and cattle prices, which has also raised the slaughter value of US dairy cows. So historically, the revenue that US dairy farmers were getting for their calves and for their slaughter cows was equivalent to $1.50 to $2 per hundredweight of milk. So the way to think about it is just the revenue that they're getting from the beef side of things is adding an additional $1.50 to $2 onto their milk check. Now, with this shift towards more crossbreeding, as well as the record high beef and cattle prices, briefly here, by my math, in October, U.S. dairy farmers were probably earning the equivalent of $7 per hundredweight of milk off of the beef industry.
So I'd like to thank StoneX for pulling together that summary. But one of the things that we're all kind of struggling with is we tend to look at milk prices in isolation. But if you take that low statistical price that we had talked about and add another $6 to it due to additional beef income, now all of a sudden that doesn't look like such a bad price. But we'll try to develop this more over the next couple months here. Just kind of finish up here with a little bit of information on grains. Now, this is as of last Friday. The soybean meal has just continued to be under pressure. So I put in the graph of the soybean meal. Here's our channel, if you will. This has been our support. This has been our resistance. We were way above this. So we pushed up here 335. But now this is kind of coming off and coming down a little bit. And again, this is all geopolitical as to whether China's buying, not buying. And we did get the WASDE report, and I would have expected this to be fairly supportive of both corn and beans. But again, we've been coming off of those highs. But I would have to comment that corn at 159 and soybean meal at 310 is much higher than normal kind of numbers, because again, we were down here at the 285 kind of for our buy signal of that soybean meal. And then finally, weather, because we've all gone through this polar vortex, and oh man, it was kind of brutal here, but we're having this significant warm up. So the country is going to see significantly higher temperatures. However, we're still going to continue to have these atmospheric rivers bringing a lot of moisture to the northwest. And it looks like there might be a little bit of moisture in this order 33, but much, much warmer than what we had been here just recently. Now, are we out of the woods for another polar vortex? So this is the wind speeds out of the polar vortex, and whenever you see this drop here, that about 30 days later, you get a polar vortex coming in somewhere. We have another one of these drops coming, so again, there could be another polar vortex intrusion. And when you look at the kind of the winds, the polar vortex is all distorted. So again, I don't think we're out of the woods from a cold winter yet. All right, back to you, Ben.
Thank you, Larry. Novus AgriScience hopes you found this information insightful and look forward to next month's installment.